more on that market reaction. Katie, how are you seeing things play out?
Well, as you say, Steve, we saw a huge surge in the price of oil, both Brent crude and NYMEX now trading more than 5% higher. This is regarding basically when it comes to fears of supply. About 30% of the global oil supply comes from Middle East countries. 5 of the top 10 oil-producing countries are all in the Middle East. Saudi Arabia, for its part, equates for about 15% of the global oil supply. So there's concerns when it comes to how this may well impact supply, as well as what a wider conflict might mean, particularly when it comes to the passage of oil through the Strait of Hormuz. About 20% or a fifth of the world's oil goes through the Strait of Hormuz every single day. So as I say, oil, we're seeing it continuing to surge. It was already up on the basis of the optimism following the US-China trade talks, as well as the fact that recent data showed that inventories of oil in the US were lower than had been expected. On the other hand, we are seeing stocks in the region trading lower. Uncertainty always sends stocks down, and that today is no exception. So, for example, Japan's Nikkei 225, it's the worst performer, down about 1.3%. South Korea's Kospi down about 1%. We're seeing similar movements when it comes to US futures. All 3 markets, the Dow, S&P 500 and the Nasdaq, all down around 1.5%. We're also seeing currency markets here hit as well, Steve, particularly, for example, the Australian dollar and the New Zealand dollar. Both of those trade against uncertainty. They prefer safety, and we're seeing them down around about 1% against the greenback. Now, one interesting element is that we are seeing as well safe haven assets. So that's where investors go during times of uncertainty and volatility, places that are considered safer to put their money. So we're seeing, for example, gold is up about 1%, Swiss franc and the Japanese yen, also considered safe haven assets, they're also up. And as I say, this all comes just as markets were breathing a sigh of relief regarding the US-China. It does seem that this risk appetite has come back. And one analyst I've been speaking with said that the market had largely shrugged off the Middle East risk. Instead now, seeing that potentially these geopolitical risks are tangible, Steve, and imminent.
Yeah, they certainly are. Thanks very much, Katie, for getting us across those developments in oil and currencies. Just to get on the newsroom, Katie Silver, for more on the market reaction. Katie, what are we seeing?
Well, as you said, Mark, we've seen the price of oil increasing, Brent crude and NYMEX both up over 5%. Now, part of this is because of fears about what this might do to the global supply of oil. We must remember about 30% of the oil supply comes from the Middle East, 5 of the top 10 oil-producing countries, all based in the Middle East. The other question, too, is what it could mean for the Strait of Hormuz. About a fifth of oil transports through that passage every single day. And if there's tensions around there, there's fears about whether or not that passage may indeed stay open. Now, one analyst I've been speaking with says that this is actually, what we're seeing here in part is a correction of the market, that the oil price has been trading too low, that analysts, for example, had miscalculated or had shrugged off the potential Middle East conflict, that they had perhaps overhyped how much more we might see production from OPEC, and that the US-China tensions had been playing on markets so much that we had seen oil prices being deflated. Now he says this is something of a correction and that we may well see continued growth in the oil price in the coming days, particularly when it comes to what we might see from Iran as in response, as well as those potential continued airstrikes that we have been hearing about on the program as well. Now, whilst the oil price might be up, it's certainly a different story on the stock market. Uncertainty, of course, is sending stocks lower. So we're seeing, for example, Japan's Nikkei 225, it's down about 1%. The Kospi in South Korea performing similarly. Meanwhile, in the US, futures also down about 1.5%. That's the Dow Jones, the S&P 500 and the Nasdaq all down around 1.5%. Currency markets here in the region hit as well, basically not liking that uncertainty, Steve. One area that we are seeing some growth, though, is what's known as the safe haven assets. It's where investors go during times of uncertainty and volatility. Gold, for example, it's up about 1%. The Swiss franc and Japanese yen also up about 1%. This, of course, comes just as markets are breathing a sigh of relief. We've just 24 hours since we've got more detail on the framework between US and China and how we may have seen those tensions alleviated. Now, Steve, it does seem that risk sentiment is back again.
Yeah, and we're in the late morning here in Asia, Katie. Just to get your thoughts then on if we spin this forward over the hours ahead, where do you sort of see markets going given the uncertainty of all this? It seems like oil prices could continue to rise with the growing uncertainty.
It does seem that way. And as I said, that's what analysts I've been speaking with have said. We're also seeing, for example, Woodside in Australia, it's an oil stock. It's up about almost 5%. There's also an indication that some of the big oil players in the US, Shell, ExxonMobil, Chevron, all of them may continue to rise as well. So that does seem to be one of the bright spots for investors in the market. But it does seem, as markets are continuing to open here in Asia, continually opening in the red. One area that's seeing it less is perhaps China and Chinese stocks, for example, as well in Hong Kong. Those losses are considerably lower. They're more or less flat, slightly to the red. But that's something we're going to be continuing to watch during the day, Steve, including when we see India open shortly.
Yeah, thanks for keeping an eye on that for us, Katie Silva, with more on the market reaction. Katie, what are we seeing?
Well, so far, Steve, we've seen oil trading significantly up. Both Brent crude and NYMEX now up around about 9%. At one point, it was up to 11% up. Now, all of this comes because we're seeing increased fears when it comes to the global supply. We must remember about 30% of global energy comes from the Middle East region, 5 of the top 10 oil-producing countries all there, as well as the fact that we're seeing this potential conflict in the Strait of Hormuz, which, of course, Iran is part of the border there, and that connects the Gulf with the Arabian Sea. About a fifth of oil goes through that passage every single day. Now, one analyst I've been speaking with says that part of this is about a correction, that the market had been underpricing the price of oil, basically shrugging off concerns in the Middle East for too long, expecting that OPEC was going to be increasing production more than perhaps it was going to, as well as pricing in these tensions when it comes to the US and China. They say now this is something of a correction, but we may see more in the coming days, particularly given this uncertainty about whether or not we may see continued strikes from Israel, as well as what the response or the retaliation from Iran might be. Now, one analyst I spoke with said that that could well include, for example, targeting oil infrastructure, as well as potentially targeting that passage in the Strait of Hormuz, particularly because President Trump has said that keeping oil prices low is something that he's very keen on. Now, this impacts everybody. Oil impacts the price of it costs to heat one's home, the cost of petrol, flying, transporting of goods. So all of that we're also seeing the impact of. Stocks here in the region also trading lower, all down around 1%, and Nikkei down about 1.5%. India's markets just opening down 1% as well, Steve.
Thanks, Katie, for keeping an eye on that. Katie Silva in our newsroom.